Okay, let's move on and talk about accruals of expenses. Now, we just talked about deferrals of expense. That is when we had something on our books as an asset and we needed to move something out of that asset account and put it into an expense account because we had used the items up. An accrual of expense is very different. With an accrual of expense, we have incurred an expense and we don't have it on our books anywhere. We've used up goods and services. We don't have them on our books anywhere. We haven't paid it. We don't have it recorded as a payable right now. Common examples include wages that we pay to our employees and also interest then that we owe. At the end of the accounting period, we'll ask ourselves, how much do I owe for this expense? What sort of expense have I incurred that's not on my books anywhere? What sort of expense have I incurred that is not on my books anywhere? If I've incurred an expense, I have more expense, and expenses go up with a debit. If I have not paid it but I owe it, I have more of some sort of a payable, which is a liability, and it goes up with a credit. So again, I would put a little star beside that entry right there. That is now our third type of adjusting entry. The amount of that entry is going to be how much expense I have incurred that I don't have recorded on my books yet. Does that entry look familiar? Let me back up. Debit expense, credit payable. Does that entry look familiar to us? It really should. Matter of fact, on your quiz, you had an entry just like that, didn't you? What if I told you that you received your telephone bill and you haven't paid it yet? You would have debited telephone or utilities expense to make it go up and credited accounts payable to make it go up. So really, in some ways, that's not a completely new entry to us now. All right, let's talk about wages first. We are going to make an assumption in this first example. My employees work Monday through Friday. No Saturdays, no Sundays. Just trying to keep things simple. Now, here's the part that's not very realistic, but we're going to assume that when they walk out the door on Friday, we paid them for the hours they worked during that week. Those of you who get paid weekly, probably you work a week, and then there's a little bit of a lag, and then you get paid, because they got to have a little bit of time to calculate your hours worked and your pay and all that. But we're going to keep it really simple. Our employees work Monday through Friday. When they walk out the door on Friday, I hand them their paycheck for their hours they just worked. Simple, yes. Realistic, probably no. Okay. My employees earn $400 a week. If that's not big enough, you put some more zeros on it. That'll be fine. And the year's going to end on a Tuesday. Here's what I want to do first. December 31st is a Tuesday, right? Which means December 30th was a Monday. 29th was a Sunday. 28th was Saturday. 27th was Friday. What was magic about the 27th? Payday. So on the 27th, we called everybody up completely. As of December 31st, how many days have my employees worked for me and not yet been paid? 2. What 2 days? Monday and Tuesday. Oh, I always skip this question. I'm sorry. Let's go on the handout first. Let's do this. Each day my employees work, they earn how much? $400 a week divided by 5 days a week that they work. They earn, what, $80 a day? Well, as of year end, my employees have worked for me, again, for how many days and not been paid? 2. What days are those? Well, those are Monday and Tuesday. Monday and Tuesday. Well, if they've worked for me for 2 days and not been paid and they earn $80 a day, 2 times 80 says they earn, what, $160? So my employees have earned $160 and they haven't yet been paid. Let's make my adjusting entry for the $160 then. What do I have more of? Wages expense. Now, if you thought salary expense, that's good, that's close enough also. The only difference between wages and salaries is that with salaries, someone is paid a fixed amount per period, per month or so, and with wages, they're paid a certain amount per hour. More wages expense, that's an expense. More of it says it goes up, so expenses go up then with a debit. Haven't paid them yet, though. Do we owe them? Yes. What else do I have more of? Wages payable. I heard accounts payable, and that's really close. Really close, because they're both payables, which is the key word. But accounts payable is what I owe to my vendors. Wages payable is what I owe to my employees then. Wages payable, though, is what type? Liability. More of it says it goes up. How do you make a liability go up then? With a credit. So my adjusting entry is going to be a debit to wages expense to make it go up, and a credit to wages payable to make the liability go up. And really, that looks similar to if I get my electric bill in and I don't pay it, doesn't it? In both cases, I debit an expense and a credit payable. Let's take that one step further. January 1st would be a Wednesday. January 2nd would be a Thursday. January 3rd would be a Friday. And what's going to happen on January 3rd? Payday. How much are we going to pay them? $400. A full week's amount. So let's do the entry on January 3rd. What do I have less of? Cash. $400 less cash. That's an asset, right? Making it go down. Assets go down with a credit. What account do I need to get off of my books? The wages payable represents a debt, an amount that I owe to somebody, okay? Once I make this payment, do I owe them that amount anymore? No, I have less wages payable, a liability, payables, liabilities, making it go down, liabilities go down then with a debt. That was for the amount I made the adjusting entry for, the amount that I accrued in the adjusting entry. What do I have more of now for 2017? Wages expense. How many days that my employees work for me in this pay period are an expense to me this year? Just 3. Wednesday, Thursday, Friday. When were the other 2 days an expense to me? Last year. Last year. So we have 3 days of wages expense that are an expense to me this year. That's an expense that goes up then with a debit. So this adjusting entry has 2 debits and 1 credit. It does not matter which order you write the 2 debits in. I put the debit to wages payable before the one to wages expense. You could have done it just the opposite, and that would be fine also. So of that $400 payment, $160 is wiping off the liability that I accrued in the adjusting entry. $240 is representing a current period expense to me. Let's do one more. Talk briefly about interest. Anybody ever borrowed money before? What's the drawback to borrowing money? You got to pay it back. And not only do you have to pay back what you borrowed, but you got to pay more to pay some interest. Unless you borrow from mom and dad, and usually they don't charge you interest here. Okay. Now, we're going to learn later on how to calculate the amount of the interest here. But now, if you borrowed money before, you probably had to make periodic payments to pay it back. Maybe monthly payments, probably, and part of that payment went to principal and part of it went to interest. The notes we're talking about are really simple notes, and there are no periodic payments. So if I borrowed $1,000 today, and I have to pay it back in 30 days, when I pay it back in 30 days, I will pay back the principal and all the interest at one time. That just is a little simpler scenario than doing the periodic payments. We're just trying to keep things simpler. So here, I've got a note payable outstanding. What does it mean for me to have a note payable outstanding? Am I the borrower or am I the lender? I'm the borrower if I have a payable. Every day that passes that I have the use of someone else's money, I have some interest expense. If I have someone else's money, I incur interest expense. I don't record the expense every day. I wait till the end of the period and record every amount that I have incurred but not yet paid. We just give you the amount in this example. So I have incurred an expense and I haven't paid it yet. What do I have more of? Interest expense, very good, which is obviously what type of an account? Expense, more of it says it goes up. Expenses go up with a debit. Have I paid it yet? No. Do I owe it? Yes. What do I have more of? I heard notes payable, which is really close, but the exact title is going to be interest payable. The notes payable account is used for principal only. We never touch notes payable for any interest. It is for principal only. But both of those accounts would be a payable. What type is a payable? Liability. More of it says it goes up. We make a liability go up then with a credit. So my adjusting entry is to record the interest that I have incurred but not yet paid and I now owe. I have more interest expense, goes up with a debit, and I have more interest payable, a liability goes up with a credit. And those are our 2 accruals of expenses. I've incurred an expense and I don't have it on my books anywhere.